In the realm of finance and business, few names resonate as powerfully as Donald Trump and Warren Buffett. Both men, titans in their own right, have amassed extraordinary wealth, reaching the pinnacle of financial success. Yet, their journeys to the top couldn't be more different. Trump, the flamboyant real estate magnate, and Buffett, the astute oracle of Omaha, stand as stark contrasts in their approaches to wealth creation. Their stories offer fascinating insights into the diverse paths one can take to reach the summit of financial power. The tale of Trump and Buffett is essentially a tale of two strategies. Trump's approach, characterized by its audacity and reliance on borrowed capital, can be likened to a high-stakes poker game. He wasn't afraid to go all in, leveraging his assets to acquire more, even if it meant courting significant risk. His empire, built on a foundation of high-rises, casinos, and a carefully cultivated brand, reflects this high-risk, high-reward philosophy. Donald John Trump, born in Queens, New York in 1946, embodied the spirit of ambition and deal-making from a young age. The son of a successful real estate developer, Trump quickly learned the art of negotiation and the allure of transforming cityscapes. After graduating from the Wharton School of the University of Pennsylvania, he joined his father's company, eventually striking out on his own to build a real estate empire that would become synonymous with his name. Trump's early career was marked by a series of high-profile projects in New York City, including the Grand Hyatt Hotel and Trump Tower, a gleaming skyscraper that became a symbol of his success and opulent lifestyle. He quickly mastered the art of self-promotion, understanding the power of branding and media attention. His name, emblazoned on hotels, casinos, and even a short-lived airline, became synonymous with luxury, aspiration, and a touch of extravagance. In stark contrast to Trump's flamboyant, high-stakes approach, Warren Edward Buffett, born in Omaha, Nebraska in 1930, charted a different course to wealth, one marked by patience, discipline, and a deep understanding of intrinsic value. From a young age, Buffett displayed a keen interest in business and investing, poring over stock quotes and devouring books on finance. Buffett's investment philosophy, rooted in the teachings of his mentor Benjamin Graham, emphasized the importance of identifying undervalued companies with strong fundamentals. He shunned speculation and short-term market fluctuations, focusing instead on buying quality businesses at reasonable prices and holding them for the long term, allowing the power of compound interest to work its magic. Despite their vastly different approaches to wealth creation, Trump and Buffett share some common ground. Both men are masters of their respective domains, possessing an uncanny ability to analyze opportunities, make calculated decisions, and ultimately emerge victorious in the high-stakes world of finance. Trump's strength lies in his boldness, his willingness to embrace risk, and his keen understanding of leverage as a tool for amplifying gains. His ability to identify undervalued properties, negotiate favorable terms, and build iconic structures cemented his reputation as a real estate mogul. Buffett, on the other hand, excels in his patience, his discipline, and his deep understanding of intrinsic value. He's a master of identifying undervalued companies with strong long-term prospects, and his ability to tune out market noise and focus on the fundamentals has earned him the admiration of investors worldwide. Both Trump and Buffett, in their own unique ways, embody the entrepreneurial spirit, the relentless pursuit of success, and the unwavering belief in their own abilities. Their contrasting styles, far from diminishing their achievements, serve to highlight the diverse paths one can take to reach the pinnacle of financial success. At the heart of the Trump Blueprint lies a concept that can be both exhilarating and terrifying: leverage. Trump, never one to shy away from bold moves, understood the power of using borrowed money to amplify his gains. He viewed debt not as a burden, but as a tool, a lever that could multiply his returns and propel him towards larger and more ambitious projects. This approach, while not for the faint of heart, allowed Trump to acquire assets far beyond what his own capital might have allowed. He used bank loans, mortgages, and partnerships to finance his ventures, effectively putting other people's money to work for him. Of course, leverage is a double-edged sword. While it can magnify profits, it can also exacerbate losses. Trump's willingness to take on significant debt was a calculated gamble, a bet that his projects would generate enough revenue to cover the interest payments and ultimately turn a profit. This high-risk, high-reward strategy was evident in his early real estate deals, where he often used borrowed funds to acquire prime properties, betting on his ability to develop them into profitable ventures. Trump's understanding of branding was arguably as crucial to his success as his financial acumen. He recognized early on that his name, synonymous with luxury and aspiration, held significant value in the marketplace. He transformed himself into a brand, carefully cultivating an image of success, wealth, and exclusivity. This brand, meticulously crafted through public appearances, media savvy, and a carefully honed persona, became a powerful marketing tool. Trump attached his name to everything from skyscrapers and hotels to golf courses and steaks, leveraging his brand recognition to command premium prices and attract discerning customers. The Trump brand, with its connotations of opulence and success, resonated with a certain segment of the population who aspired to the lifestyle he projected. Section 3. Navigating the high-wire bankruptcy and resilience. Trump's path to wealth, while paved with bold moves and calculated risks, wasn't without its share of setbacks. His aggressive use of leverage, while often successful, occasionally backfired, leading to financial difficulties and even bankruptcy filings. However, Trump's ability to navigate these challenges, to renegotiate with creditors and emerge from these situations with his personal wealth intact, is a testament to his resilience and his mastery of the art of the deal. His casino ventures in Atlantic City, while initially successful, faced stiff competition and ultimately succumbed to financial pressures, leading to multiple Chapter 11 bankruptcy filings. These setbacks, while undoubtedly damaging to his reputation in some circles, didn't derail his overall success. Trump's ability to bounce back from these failures, to renegotiate debt, and to rebuild his empire speaks to his tenacity and his ability to learn from his mistakes. Section 1. The Oracle of Omaha's Investment Philosophy. Warren Buffett's approach to wealth creation stands in stark contrast to the high-flying, leverage-fueled world of Donald Trump. Buffett, often referred to as the Oracle of Omaha, built his fortune not on risky bets and audacious deals, but on a foundation of patience, discipline, and a deep understanding of intrinsic value. His investment philosophy, often described as value investing, centers on identifying high-quality companies with strong fundamentals and holding them for the long term, allowing the power of compound interest to work its magic. Buffett's investment approach is rooted in the teachings of Benjamin Graham, considered the father of value investing. Graham's philosophy, which emphasizes the importance of identifying undervalued companies with strong balance sheets and a history of profitability, resonated deeply with Buffett, who saw it not as a get-rich-quick scheme but as a sound and sustainable approach to wealth creation. Central to Buffett's philosophy is the concept of intrinsic value, the inherent worth of a business based on its assets, earnings, and future prospects. Buffett believes that the stock market, while often driven by short-term speculation and emotional swings, ultimately reflects the underlying value of the companies it represents. Section 2. Building a moat. Investing in quality and durability. Buffett's investment strategy hinges on identifying companies with strong moats, characteristics that protect them from competition and allow them to generate profits over the long term. He seeks out businesses with durable competitive advantages, such as strong brand recognition, economies of scale, or unique products or services that are difficult for competitors. One of Buffett's most famous investments, Coca-Cola, exemplifies this approach. Coca-Cola, with its iconic brand, global distribution network, and secret formula, enjoys a formidable moat, its market dominance for decades. Buffett recognized these enduring strengths and made a significant investment in the company, an investment that has generated substantial returns over the years. Section 3. The power of patience. Letting compound interest work its magic. Patience is not simply a virtue in Buffett's investment approach, it's a cornerstone of his strategy. He understands that building wealth takes time, and he's willing to wait for his investments to mature, often holding them for years or even decades. This long-term perspective allows him to take advantage of the power of compound interest, a force he famously described as the eighth wonder of the world. Compound interest, in its simplest form, is the concept of earning interest on your interest. A study in contrasts, the mindsets of Trump and Buffett. To truly grasp the divergent paths of Donald Trump and Warren Buffett, one must delve into the underlying mindsets that fueled their financial decisions. These two titans of industry, despite both achieving extraordinary wealth, operated with contrasting philosophies, each driven by a unique set of beliefs and motivations. Understanding these fundamental differences is key to unlocking the secrets behind their respective blueprints for success. Trump's mindset, much like his public persona, exudes a sense of urgency, a drive to achieve success quickly and decisively. He's a master of the art of the deal, a skilled negotiator who thrives in high-pressure situations where fortunes are made and lost. His risk tolerance is legendary, his willingness to gamble on big ventures a defining characteristic of his entrepreneurial spirit. Buffett, in stark contrast, embodies a more patient and contemplative approach. He's a meticulous researcher, a voracious reader who devours financial statements and business biographies with equal zeal. His decisions are rarely impulsive, instead stemming from a deep understanding of intrinsic value and a long-term vision for his investments. Trump's world is one of constant motion, of deal-making, branding, and self-promotion. He's a master of leveraging relationships, of using his name and reputation to open doors and secure favorable terms. Weighing the scales, strengths and risks of each blueprint. The contrasting blueprints for wealth embodied by Donald Trump and Warren Buffett each come with their own set of strengths and risks. Understanding these inherent advantages and disadvantages is crucial for anyone seeking to emulate their success or draw inspiration from their respective journeys. Like a set of scales, the potential rewards and inherent risks must be carefully weighed before embarking on either path. Trump's strategy, characterized by its reliance on leverage, boldness, and a knack for branding, offers the allure of rapid wealth creation. His willingness to take calculated risks, to use borrowed money to amplify gains, can lead to exponential returns, particularly in fast-moving markets like real estate. His mastery of branding, his ability to attach his name to ventures and command premium prices, further enhances his wealth-building potential. However, this high-risk, high-reward approach comes with inherent vulnerabilities. Trump's reliance on debt makes him susceptible to economic downturns and interest rate fluctuations. Blending the blueprints. Lessons from two titans. While the contrasting approaches of Donald Trump and Warren Buffett might seem like polar opposites, there's much to be learned from studying both blueprints for wealth creation. Rather than viewing their strategies as mutually exclusive, aspiring investors and entrepreneurs can glean valuable insights from each approach, potentially blending elements of both to forge their own unique path to financial success. From Trump, one can learn the power of leverage, the importance of branding, and the value of calculated risk-taking. His ability to use borrowed money to amplify returns, his mastery of self-promotion, and his willingness to seize opportunities, even in the face of uncertainty, offer valuable lessons for those seeking to maximize their financial potential. Whose path will you forge? The contrasting legacies of Donald Trump and Warren Buffett offer a compelling study in the diverse paths to wealth creation. Trump, the audacious dealmaker, built his empire on leverage, branding, and a willingness to court risk. Buffett, the disciplined value investor, amassed his fortune through patience, long-term thinking, and a deep understanding of intrinsic worth. Their journeys, while vastly different in style and temperament, underscore the fundamental truth that there is no single blueprint for financial success. The choice of which path to emulate, or perhaps more aptly, which elements to blend from each, ultimately rests with the individual. Are you drawn to the allure of rapid wealth creation, the thrill of the deal, the potential for exponential returns, even if it means embracing significant risk? Or do you find solace in a more measured approach, in the steady accumulation of wealth through disciplined investing, in the comfort of knowing your financial foundation is built on solid ground? The allure of Trump's approach lies in its potential for rapid transformation. His career is a testament to the power of leverage, of using borrowed money to amplify gains and accelerate the wealth-building process. His mastery of branding, of creating an aura of success and exclusivity around his ventures, further fueled his ascent. However, this path is not for the faint of heart. Trump's reliance on debt, while a powerful tool in a rising market, exposed him to significant risks during economic downturns. His ventures, often tied to his personal brand, were also vulnerable to reputational damage, a factor that can quickly erode value in today's interconnected world. Buffett's approach, while less flashy and potentially slower in generating wealth, offers a sense of stability and predictability that many find appealing. His focus on investing in high-quality companies, businesses with durable competitive advantages, and a track record of profitability provides a buffer against market volatility and economic uncertainty. His emphasis on patience, on letting investments mature over time, and allowing compound interest to work its magic, might seem at odds with a culture obsessed with instant gratification. However, his enduring success is a testament to the power of thinking long-term, of resisting the urge to chase quick profits, and of staying the course even when markets are turbulent. The most effective blueprint for wealth creation is often a personalized one, a hybrid approach that blends elements from different philosophies, tailored to individual risk tolerance, financial goals, and personal temperament.